So, if I was to wake up tomorrow as a brand new business owner, a solopreneur, but I had no systems in place, no employees, none of that stuff, this is exactly what I do when it comes to managing my finances. Being a chartered accountant gives me a wealth of experience when it comes to looking at the books, seeing the numbers, and knowing exactly what works when it comes to running a business. Now, a big mistake that a lot of new business owners make and new solopreneurs is neglecting this stuff. And it's understandable because when you just get set up, all you want to do is sell, 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 which I get because you need to bring in money in. And ultimately, without money coming in, there's going to be no books to manage. But I promise you, what you want to be doing is getting this stuff set up as you are just getting started so you can hit the ground running and make sure nothing goes wrong. This video is just going to go into a few of the tips that I'd give a new entrepreneur, a new solopreneur who is just getting started when it comes to managing their finances. So the very first thing I do is make sure that I have a separate business bank account. When I got started as a solopreneur back in 2017, 2018, I didn't really have a clue about business finances. And I kind of thought it all joined together with my personal. But the reality is completely different. If I was you, I'd set up your very own business bank account using any sort of major bank or online bank and get yourself a business only credit card or debit card. Because trust me, the people that try and mix it all together are the ones that fail. And when it comes to navigating your cash flow and having a clear look on exactly what money is coming in and money is coming out, you need to be able to segregate between your business and your personal. So get yourself a business bank account set up and you'll thank yourself for it. The second thing I do is to start building myself up a cash buffer. It's very unlikely that every single month in business is going to be the same for you, particularly if you're just getting started. Now, one month you might pull in a lot of money, you might sign a big client, you might bill a lot, which is all good. But then the next month may be a little bit slower, and perhaps your incomings don't quite cover all your expenses. If I were you, I'd set up a cash buffer of between 1 and 3 months just to make sure you have enough cash on hand to cover all the expenses that may come up. Tally up all the different expenses you have coming out by direct debit every single month, making sure you factor in everything and see how much that comes to. My third tip is to create your money buckets. Now, this very much ties in from our previous tip where we set up a buffer, but I'd recommend you go one step further. Within most banks, you can set up sub accounts, and I'd recommend you have the following dedicated accounts. I'd like to give a shout out to Mike Malakovich. I hope I pronounced that right, but his book, Profit First, gave me this idea, and it's a great one. So I'd very much recommend reading that and implementing it for yourself. 5 sub accounts that Mike recommends you having are firstly the income account. So every single sale, every single Stripe payment, every single PayPal receipt all goes into this one account, the income account. And this is basically the hub and the first point of contact when anyone sends you money or you sign a client, bring cash into the business, goes into this income account. Your second account is going to be your profit account. Now, this is basically your reward for your owning your business. And you basically want to segment a certain portion of your income into this profit account, whether that be 5% or 10%. But this is basically your money, the profits of the business going into this account. So it's not for expenses, and this is not an account you touch, but you leave it there and it's basically your reward for running your business. Third account is going to be your owner's pay account. Think of this as effectively your wage. You want to allocate again a certain portion of your income going into this owner's pay account to pay yourself every single month, because you want to be doing that as a business owner. You're running your business to make money and build a better life for yourself. Having your owner's pay account, the buffer account for your own wages and all the taxes that come with that. So the fourth account is going to be your operating expenses account. Now, this is basically the account for all your software, all your tools, all the expenses that you need on a month-to-month basis to run your business. This account is likely going to fluctuate month by month depending on new tools or new software you buy or if you cut costs, but it's allowed to fluctuate. And you basically just want to see the percentage of these expenses against the income coming in. Allocate a certain portion of your income into this expense account to make sure that you can cover all of your costs. The last account is the tax account. You want to allocate 20 to 30% of your income out into this account to be able to pay your taxes, whether that's corporation tax or VAT or any employment taxes you have to pay, depending on where you're based in the world. You want to make sure that you have this account nailed and you don't touch it, because ultimately, if you are profitable, you're going to have to pay tax. And you want to make sure that this isn't a surprise to you and you have the right amount of money in your sub account to make sure you can cover that tax bill when it arises. My fourth tip is to just use a simple bookkeeping tool or accounting tool to track your incomings and outgoings. As you get more sophisticated, as you get more clients, and as you start spending more money, you're going to want to see exactly what you are spending and what is coming in on a month by month basis. Using a bookkeeping software like QuickBooks or Xero is going to really help with that and basically show you exactly what's coming in, what's going out, what your cash position is, and allow you to forecast and make better decisions going forward. Again, you can use Excel or Google Sheets in the beginning when things are quite simple, but as you start developing and getting better in your business, you're going to want to set this up for yourself. I'd really recommend going and setting up your own account for one of these as you start making money, and just start tracking from the get-go. Keep your invoices, keep your receipts, tag it onto the expenses and income as they come in. Stop billing clients, keep it professional, keep it very business-like. You want to be doing that from the beginning. A big mistake I made when I got started back in 2018 is not doing that, kind of just going sporadically with it, not tracking anything properly, really not having a clue as to what I was doing when it came to the finances. So learn how to use Xero or QuickBooks or any other bookkeeping package and get yourself going on one of them sooner rather than later. My final tip for a new entrepreneur or new solopreneur is to just schedule a weekly money date or a weekly money review with yourself for 15 to 30 minutes, scheduled into the calendar each week, and just review what money came in, what money came out, what money I anticipate coming up. Do we have enough cash to fund this project? Do we have enough cash to survive next month? Do I need to allocate money between my sub accounts? Just give yourself a thorough examination and audit of where you are currently and where you are headed. By doing this, you're going to be able to make far better decisions. You're going to be able to use cash a lot wiser. And you're just going to be able to see, can I pay myself this amount next month? Is this client payment going to come in on time? Do I need to chase this up? Do I have any overdue bills or invoices? It's just going to give you a far better understanding of your business and allow you to really look at those finances and properly scrutinize them, as opposed to just looking at them once a year or once a month and making decisions on a more macro basis. So every week, I just say 15, 30 minutes, just give it a quick review, make some notes, see how you performed on the last week, and use that as a bit of motivation to move forward. I hope that was a helpful video to you as an entrepreneur or a solopreneur. I'd be very interested in hearing what your money systems are or your finance systems in the comments below. So let me know what you're currently doing and what's working for you, and if you are going to incorporate any of this.